Thank you for tuning in to the All Funds Network podcast. Today, Skyler and I are joined by Zach Townson. Zach's the co-founder and CEO of Meanwhile. Meanwhile is a life insurance company denominated Bitcoin.
Pretty exciting. Yeah.
Yeah, it's interesting. First thing I've ever seen of it. I think it's the first of its kind.
Yeah, it really makes you think about kind of just the insurance wrapper, how it's fundamentally how insurance works, I guess, and then when you have Bitcoin element into it, how that works in real time, from policies to everything's denominated in Bitcoin, how that works downstream, right? So, excited to kind of hear what Zach has to say about kind of the whole process.
Yeah. And to your point, another thing that's cool about it, the company is denominated Bitcoin. There's not a lot of companies like that. So I'm sure we'll see more in the future. Like we talk a little bit about DATs. Obviously, this is not a DAT, but the digital asset treasury for those that are listening. But I could see a future where more companies want to take this approach. So we get into a little bit of that. I think that part's pretty interesting.
Yeah, and obviously too the structure, going through that process with regulators and then to an unproven territory with life insurance being the main product that's been around for over 100 years or so, right? Just insurance has been one of the oldest staples in our economy to that point that Zach brings up. So yeah, pretty fascinating.
Yeah. 100%. So yeah, we talk about Bitcoin life insurance. We'll get into some of the tax advantages of life insurance, not just applicable to this, but definitely applicable to this for Bitcoin holders. We talk about where the company's based, lending, how they go about lending, borrowing. Fun conversation. I think Zach's got a lot of cool insights here.
Yeah, absolutely. I think it'll be exciting for our people who are in the space looking for another opportunity. If they're already in Bitcoin, a different way to hold it from an insurance product perspective.
Yeah, great point. Obviously, we do a lot of crypto. A lot of our listeners are in the crypto space, so check them out. But no further delay. We're gonna go ahead and start the episode here.
Sounds great.
My name is Mike Schroeder. Today I'm here with my co-host Steinke, and we're joined by Zach Townson. Zach is the founder and CEO of Meanwhile. Meanwhile is the world's first Bitcoin-denominated life insurance company. So we're going to get into today mostly Bitcoin life insurance. But Zach, thanks so much for joining us. Appreciate you taking the time.
Yeah, I'm really happy to be here.
Absolutely.
Very cool.
Let's start with your background. So what, kind of walk us through your background, curious how you even came up with the idea, but let's start with that and, kind of walk us to where you're at today.
Yeah. So I'm a FinTech guy by background. I spent most of my career sort of at FinTech companies in like product roles and risk roles and things like that. I started my first company in 2013. I went through Y Combinator, backed by Index Ventures, Andreessen, a bunch of other folks. And we were building sort of banking as a service, bank account as a service. This is like, we built infrastructure that existed between banks and FinTech companies. It made it easy for them to offer bank accounts to their customers and payments and stuff like that. So that business more or less failed into an acquisition with Silicon Valley Bank, which was a going concern, obviously, in 2015. And at that time, that is when I both first got introduced to life insurance and got introduced to crypto. So on the crypto side, this is in the era where Coinbase was pretty young. They were having struggles with payments, with risk, with being banked, and they offered to buy the company. And we didn't think that made any sense because we didn't think they were going to survive. So we were wrong about that one. But I received my first Bitcoin from Brian Armstrong, who's the CEO of Coinbase. This was a common thing he did at the time. I'm not particularly special, which is that he would send people a Bitcoin as they're like, but you had to sign up for a Coinbase account to claim it. Mm-hmm. So that was my first introduction to Bitcoin. And then on the other hand, I got very interested in life insurance because, life insurance is sort of like permanent capital. I've been thinking a lot about banking, and banking, all the stuff around banking. And I had this realization that a life insurance company is really the best bank because there's a match between the long duration assets that you might want to buy, like a mortgage or whatever 10-year corporate debt, and the liabilities of a life insurer. And this is not. I find out later this is not like I'm not the only one who ever thought of this, right? Like this is why Apollo owns Athene and KKR owns Global Atlantic and Ares owns Fortitude and Blue Owl owns Guvar. I mean, like lots of people have had this realization that a life insurance company is a really good permanent capital vehicle particularly for credit. And so these two like realities, crypto and life insurance, they like the seeds are planted in like 2005. And I go and do a bunch of other stuff. I light a chunk of product, another FinTech unicorn. I worked at McKinsey for a few years as a leader in the FinTech practice. And basically, both of these ideas were things that were like holding in my head. Like on the one hand, it'd be really amazing to build a tech-first life insurance company, but technology is not itself a like good enough go-to-market strategy. So I could never quite crack that nut. And on the other hand, I started dollar cost averaging into Bitcoin. I sort of came to really believe in Bitcoin as an interesting global store of value. And when my co-founder and I sat down to found this company, we actually came at it more from the Bitcoin side. And we said, okay, if this is going to be a global store of value, why don't we imagine it as an economy? Like it's a new country. And it might be a weird country, and then it's like global, it's decentralized, and like overlays other economic systems. But like it's an economy like any other economy. And then we made a list of like what are the financial institutions that exist, regulated financial institutions that exist in every economy or every developed economy, right? So there are banks and there are payments companies and there are asset managers, there are fund administrators. There's a set of things that are just true in like every developed economy. And actually, we did not have insurance or life insurance on that list. And I woke up 2 weeks later, honestly, in the middle of the night, like shot out of bed, and I was like, there should be a Bitcoin life insurance company. And I went to the office. It was like COVID times. And then I wrote the memo that became the memo we raised our seed round on. So that was over 3.5 years ago now. And that is how we thought of this company.
Cool. Very cool. I got to go back to like the story about Brian Armstrong, kind of how did you get introduced to him? What price was Bitcoin at this period of time?
Boy, I could look it up now. Probably hundreds of dollars. I don't know how I got introduced to Brian and Fred. I don't want to pretend that they're like my best friends or anything.
Of course.
But they, I had gone through Y Combinator. They had gone through Y Combinator. I might have answered some posts they had on the internal forum of YC about bank account stuff. I don't really remember, but they were sort of in crisis. This is like a well-known story. They were sort of in crisis at the time, really growing quickly, lots of trouble and having like those on ramps, off ramps, and yeah, I don't know. I probably have hundreds of millions of dollars, but I'd sold my company to them instead.
See, and that kind of took you down the rabbit hole. You kind of started hodling after that.
Yeah, that's right. I mean, I think I wasn't necessarily convinced about Coinbase in 2015, or rather, I was convinced as a fintech entrepreneur it was a pretty cool thing to sell your company to a bank. Like at that time, this was like before WePay had sold to JP Morgan. I think there was only like one or two, like not like startup acquisitions by a bank like in the country, right? So we felt that like that was a pretty happy outcome for us as people who thought we might want to like do the entrepreneurial game again. But yeah, that's right. I believed in Bitcoin, and then there's a whole like world of stuff that happens between 2015 and 2022 when we start the business, and I want to say more or less ignored that. So I like buying Bitcoin every week on Coinbase. I did not like get into the ICO bloom. I did not like. I was just like, oh, this is something I believe in. I'll just buy whatever. Like honestly, like $50 a week for 200 weeks or whatever.
Mhm.
But so I'm neither one of these people who like bought 1,000 Bitcoin for $10 in 2013. So I like, I have to work.
Yeah. Well, cool. So, okay, so you guys offered Bitcoin life insurance. So you had this idea. You guys have been doing this now for a couple years. Talk about just like the company itself. So you guys offer Bitcoin life insurance. Who's kind of your main clients? Maybe we start there.
Yeah. So so Bitcoin life insurance, what that means is, we have a company in Bermuda, not the Bahamas, just to be clear. Bermuda is a legit place to have an insurance company. You walk around Bermuda and it's like Brookfield and Athene and Chubb. Like this is like lots of insurance companies are based there, or lots of insurance companies and affiliates there.
Highly regulated.
So we are fully licensed and regulated by the Bermuda Monetary Authority as a life insurance company. We do everything a life insurance company has to do. Like we have a chief risk officer and an independent board and all this stuff. And what is unique about our company is that we do everything in Bitcoin. So we take all premiums are paid to us in Bitcoin, and then we pay all claims or death benefits in Bitcoin. And then we do everything in between, all the insurance stuff. So like our regulatory filings, our audited financials, our solvency calculations, our actuarial math, those are all entirely in Bitcoin. And then what's nice about this is really two things. The first is that we are insulated, as is our customers, from the price movements of Bitcoin, right? So we're not because our promises to our users and our assets, which I will describe, are matched in Bitcoin. If the price of Bitcoin goes down 50% or goes up 50%, like all of our assets and liabilities are matched, right? So we're insulated from the price movements of Bitcoin. That is really important. And then the second thing is just being a life insurance company affords you certain privileges. And the big one is that we, in fact, sell life insurance contracts. And we follow all these rules in different jurisdictions, depending on where our users are. And usually we can design a product that in a jurisdiction that gets whatever the benefit is that is common in that jurisdiction. So in the United States, the first and most important benefit of life insurance is that if you get hit by a bus, your loved ones get a benefit, right? So that's the first thing, is the protection. But it's also the case that there's a lot of tax privileges and tax benefits for life insurance. So by designing the product correctly, by being a regulated life insurer, we are able to have a product that gets those same benefits. So our users tend to be folks who have already decided about Bitcoin. I want to be clear on that. Like, we don't consider our business to be convincing people that they should have exposure to Bitcoin.
For sure.
They've already made that decision. Like, hopefully BlackRock has convinced them, or Fidelity, or they made the decision in 2013. Now, whether that was for ideological reasons or just because they wanted to buy drugs on Silk Road, I don't know. But whatever the reason was, like, these people have decided that they're going to own some Bitcoin, that Bitcoin likely is to them and to us, it's a durable store of value. It's incredibly powerful. And then we tend to have, to answer your specific question about who our users are, we have two pretty distinct users right now. One set of users are just like people who are rich because of Bitcoin. And then what's nice about those folks who were buying drugs in 2013 is that they are growing up. They are getting married. They are having kids. Like, they are maturing into their 30s and 40s. And they, somewhere in the recesses of their mind, have thought, like, maybe I should buy some life insurance. And then we're like, you should buy life insurance and the most inflation resistant asset that you already believe in. So that's like persona one. And then the other persona is more like a family office. They're rich for some other reason. You know, they run a fund, or they have a hedge fund, or they're a venture investor, or they're an entrepreneur, or we have some people who just like own a bunch of small businesses, or we have a number of doctors actually, and they've made a decision to own Bitcoin again for whatever reason, and then but they've also probably been pitched life insurance or life insurance structures for the tax benefits, and we can talk about like how the product like literally works mechanically. But that this persona like already knows about these products. They've just never thought about the products for Bitcoin. And then we're like, this is the right way to hold your Bitcoin. So those are like our two customers right now. And then we're in the middle of a huge international expansion, but then there's like different people. Like, why do 8% of the GDP of Hong Kong is life insurance? And that actually isn't about taxes because there's no taxes, right? So different jurisdictions have different reasons that they might buy long-term insurance products. I'm just describing to you like who the U.S. customers are.
Yeah. So that's really interesting, Zach. I guess from the life insurance perspective, is it more about just because obviously life insurance is life insurance for people who know there's other ways to kind of hold, assets. There's protection, obviously, from an asset perspective in these states relative to life insurance. One of the few vehicles that are still in the books in the tax code, right? I'm curious just how, like, for example, talking about your audience, someone know what Bitcoin is, they're familiar with it. You guys have spoken about it, but obviously, as an example, if someone gets a claim, $1 million claim, and the volatility.
No $1 million claims. Right. No $1 million claims. What? Sorry, very important. Right. 10 Bitcoin claims.
Right. So the equivalent in Bitcoin, so they get the receipt of that in the same Bitcoin denominated value.
Correct. So the core product we have is what's called whole life.
Right.
And it's called whole life because it lasts your whole life.
Right.
And because you will eventually die, there will eventually be a payout. Mm-hmm. And then the other part is in the United States, it's a 10 pay, which means you pay once a year for 10 years in equal installments. So you might pay us 1 Bitcoin a year for 10 years, and then we promise you a fixed guaranteed payout in Bitcoin terms. For simplicity, I'll say 15. Mm-hmm. But that depends on your age, your sex, whether you smoke, like the normal insurance underwriting. So the point is that we're promising you 15 Bitcoin. We're not promising you $1.5 million.
Understood.
So for many of our users and us, I say I was our first policyholder. We believe that 15 Bitcoin will have significantly more purchasing power in the future than in the present.
That's what I was getting at. Okay.
Right. Yeah. So yes, you're putting the 10 Bitcoin in. That's the 15. That's the protection. The second thing you get is there's this compounding that's happening tax-free. Like, even if you thought you could turn 10 Bitcoin into 15 Bitcoin, you would owe interest income tax every year. But you get further with us because it's a life insurance policy. Then the third thing is, it just like any other life insurance policy, it goes to your kids income tax-free. Like, we have an obligation to make sure I'm using kids as a stand-in for your beneficiaries. And then the last thing that's really cool, and the reason it's a 10 pay, is that you can borrow out of the policy tax-free.
Yeah.
So if Bitcoin goes to $1 million of Bitcoin, or whatever you think it's going to be, then you can borrow Bitcoin back out. But from your perspective, that's new tax basis Bitcoin. Mm-hmm. And again, this is the same exact pitch that Northwestern Mutual or New York Life would give you on whole life, right? You get protection, you get tax-free compounding, goes to your kids tax-free, and you can take a tax-free policy loan. It's just that all of these things are mechanically happening in Bitcoin on our policy.
Now, correct me if I'm wrong. In that situation, I always think about this from a 401k. If you borrow from a 401k versus an insurance policy, that even though you borrow from it as a loan, that Bitcoin is still sitting in there earning you interest. even though you borrowed against that policy.
No, not in the case of insurance policy. So like you're, well, it is earning you interest, but you're paying interest. Right. So the way it works is you've like put your 10 Bitcoin in, and basically our guarantees are that we'll give you 2% return.
Right.
Again, it's like there's a probability distribution of when you're going to die, and you're discounting the anyway, you can simplify all that math to something like there's 2% returns in Bitcoin. That's what we offer our users. And then we charge you our rate of return on our investments, which is about 3.25. And so what's happening is you are owing us more every year than we're owing you, which is that like 1%. Mm-hmm. But we only let you borrow like 90% LTV, let's say, against your surrender value, which is like the value of your policy. And in that way, you can never owe us more money than we owe you. So what you're really doing is you're sort of like taking an advance against your death benefit. Mm-hmm. So let's say you've borrowed 2 Bitcoin. In 30 years, you die. That 2 Bitcoin is turned into a 3 Bitcoin loan. Then instead of your kids getting that 15 Bitcoin I mentioned, your kids get 12. Yeah. So we net it out again. Like the expectation is you never actually pay back the loan. You just eventually die.
Okay.
Yeah.
Well, we'll get into the mechanisms a little bit more in a minute, but let's start with like, all right, you start this company. Obviously I've never started an insurance company like this. So, how do you even start with like a,
neither have I.
What kind of like basic capital do you start with? Like I imagine, you start getting these policies in, obviously people are going to pass, next year, the following year, whatever, 10 years from now, but how do you kind of build up that base? And
nobody's died yet.
Okay. That's good. So I guess
the way, so it's a long process, right?
Yeah.
So we started the company in 2022. We start by spending some time thinking about where we want to be based, who's going to let us, who can we work with to get this done? We identify Bermuda as being a very respectable jurisdiction. To be honest, we probably could have gone faster in a different jurisdiction. Mm-hmm. But we wanted a jurisdiction that people would respect. So we picked Bermuda. It took us about a year to get approval in the sandbox, which is like the playground. It's the sandbox. That's what it sounds like. And then it took us another 11 months to launch. Because we had to build all the stuff of insurance company, right? Like we have to do KYC, we have to do AML, we have to like do solvency calcs, we had to design the product, we had to like do all this governance, risk, and compliance. Like we just an incomprehensible amount of stuff. Like everything an insurance company does, we were doing it with like 5 people. Mm-hmm. And we sold our first policies in November 2023. And we were sort of off to the races. We got fully licensed in the middle of 24, so about a little over a year ago. And, been super successful at raising more capital. Our big aspiration, I think, for next year is we're going to try and get a credit rating.
Wow. Very exciting.
But to answer your literal question, yes, every insurance company, we put capital in. Mm-hmm. That's like equity. And then we're allowed to write a certain amount of liabilities against that capital. And then you take the liabilities and the equity together, and then you get to invest it in assets, right? So honestly, I was pretty lucky. So we raised about, I don't want to say lucky, I'm a genius. We raised about $20 million across 2 seed rounds in 2023. FTX happened. Bitcoin's crashing. Like, looks like it could go to the floor. And I was like, well, I'm running a Bitcoin company, right? So either if Bitcoin goes to zero, I don't own a company either way. So we bought a ton of Bitcoin between like $15,000 and $20,000. And then we took all of that Bitcoin, which was about like 200 Bitcoin, and we put that in the insurance company as capital.
Yeah.
Wow.
It's just that used to be something like $4 million, and now it is something like $22 million or something, right?
Yeah.
So yeah, we had a really interesting Series A conversation where we're raising capital, and I was like, the value of the Bitcoin on our balance sheet is actually more than the amount of capital in dollar terms that we've raised.
That's interesting.
Because actually it goes up because we have earnings in Bitcoin, right? So we actually anyway. But yes, and we bought Bitcoin, we capitalized the company, and we run an insurance company.
Yeah. On that, kind of just on that same note, kind of as you go through the creation process, what was the discussion around custody relative to kind of what you were doing at that time with a new product in life insurance?
Yeah, from the earliest days, we are diversified in our custodians, but we just tell people the bulk of our assets are at Anchorage. We find that Anchorage is who we're most comfortable with from a security and perspective. Sometimes we get asked whether we've considered self-custody, but basically not. Anchorage spends a lot of time building a lot about a lot of security, a lot of permissions, a lot of controls, and this is a great time because I love to mention it, which is that I can't move Bitcoin by myself. Don't start chopping off my fingers. It takes a lot of people who live in a lot of different places to move any Bitcoin at Anchorage, and that's something we really love about them. There's no phishing attack on me that's going to lead us to lose any Bitcoin. So, and we liked them from the beginning primarily because of their security model, but them being like an OCC regulated trust company obviously helps. And the Bermuda regulators were very comfortable with them because of that regulatory setup.
Okay, so you build this this treasury, this capital. How does it?
Well, I guess what I'll say is, we run an investment operation in Bitcoin, right? And people are very curious about how we can promise 2% returns. And I guess fundamentally, like every life insurance company, we have something that very few other people have, and particularly in crypto or Bitcoin, which is we have duration.
Mm-hmm.
So we are very comfortable with duration. We are very comfortable with liquidity risk. We are very uncomfortable with credit risk and bad counterparties. So fundamentally what we do is we are in the business of lending Bitcoin to others. And we trade duration, which we have for credit protection. And then, we run a private credit operation. We negotiate contracts that have covenants and collateral and seniority and parental guarantees. And no, we will not stand off against your bullshit Cayman subsidiary with negative equity. But again, what we have for our counterparties is if they have some productive use for Bitcoin, and often to be honest, that might be like market making or some hedge fund strategy. If you have a productive use for Bitcoin, or we do some mining loans, if you have some productive use for Bitcoin, then knowing that when the next FTX happens, we are not calling this loan is incredibly valuable, right? It's a piece of term lending that should be part of the structure. And I'm happy to report that we've been doing this really since the very beginning. And we have never had a credit loss. So that includes when BlockFi blew up and Celsius and Voyager. But we are very conservative. And what I like to say is we are not trying to get 7 or 10% returns on Bitcoin. We are trying to get 3% returns on Bitcoin. And we've been able to do that.
Yeah. How do you guys go about finding borrowers?
I think they find me. It's not that hard.
Yeah.
I would say my joke about lending, right, is easy to lend people money. It's about getting it back. So,
Good point.
but fortunately, just like life insurance, basically we sit around all day thinking about adverse selection. So, yeah, borrowers tend to find us, and then we tend to analyze them and say no. And then every once in a while, we say yes.
Yeah.
From a traditional life insurance process policy versus obviously what you guys are offering, what's the kind of risk premium difference? Is there, from a premium perspective, is there kind of a certain premium allocation given it's a Bitcoin, that Bitcoin is attached to this model, or it's just business as usual? It's just life insurance, the same actuarial.
It's just life insurance. Actually, if anything, I'd say there's a pretty deep discount in the sense that, like, if you bought $1 million whole life policy from Northwestern Mutual, you are going to be promised 5% lifetime returns, right? And as I said, we're promising you 2%. So in that sense, there's a pretty deep discount, not a premium. The difference is that we want to pay you out in 15 Bitcoin, which we think is going to be worth a lot more in purchasing power terms. So it's completely swamped by that appreciation. And that's just a practical reality. Like, sometimes we just get pressed in this question, like, well, treasuries yield 4.5%. And I'm like, treasuries aren't denominated in Bitcoin, right? So we are not taking some huge spread. Basically, all insurance companies, are targeting something like a 75 basis point to 1% spread. It's just that the actual returns on Bitcoin are much lower, and are somewhat insulated from changing interest rates in the dollar economy. You should just think there's like completely different yield curves, just like there's a different yield curve for the yen and the euro and the dollar. There's like a whole different yield curve for Bitcoin, and we operate in that yield curve, and that yield curve is lower in nominal returns right now. But we expect that the overall policy will be much, much better returning in purchasing power terms.
Got it. Okay. That's helpful.
Yeah. What have been some of the biggest challenges starting this company so far?
Yeah, look, I mean, now I look like a genius because we're really stubborn. So, FTX, Celsius, BlockFi, Genesis, they blew up, and we just kept trucking and doing our thing. But that was like, we were wise enough to raise capital when we could, and that allowed us to have a through cycle perspective that, like, we really believe in Bitcoin. Our ultimate vision is that, like, if you're a middle class person in Argentina, you don't buy life insurance because you're going to live longer than the Argentinian peso. And, some days it feels like the same is true in the United States. I mean, inflation over the last 5 years has been like 20%. So, but I don't want to say that there's been any unique challenges to us. I think we just have all the challenges of a Bitcoin company and all the challenges of a life insurance company, and you smash them together. And then sometimes you get some fun interactions between those things, like, how do you do actuarial math in Bitcoin? Like, what's the discount rate for Bitcoin, right? Well, that's like key to the question of how you run an insurance company and you figure out your reserves, right? And that was like no small question, right? There's like tons of analysis, and we had to write a whole memo, and we had to convince the BMA, like there's all this work. But I like to say that, like a lot of things in FinTech, it's not really hard. It's just really complicated.
Yeah. Yeah, absolutely. Regarding the tax situation, I don't know if we want to get into that, just the tax benefits from a Bitcoin perspective. I mean, or is it's the same benefits you would have in any other life insurance policy? There's no other nuances for the underlying holding.
I think the only nuance we sort of talked about, which is that, the policy loans that we give to people are in Bitcoin terms. Yeah. So it's like you're taking, you're able to dispose of Bitcoin without paying a capital gains hit. But the other thing is, like, we don't have any margin loans, like, or margin calling. There's no, like, you don't never have to post collateral. You can't be blown out because the collateral is in Bitcoin.
And to your point about not or being able to dispose of your Bitcoin without paying those capital returns, could you dive into that a little bit more?
Yeah. So let's say you put in a 10 Bitcoin today when the price of Bitcoin, I'm just going to say, is 100,000. So then you have 10 Bitcoin. The policy, I'm sort of simplifying, it's accumulating in value over time, right? So now let's say it's 10 years from now, you have 11 Bitcoin is the surrender value of the policy. Then you can borrow 1 Bitcoin out. But if that Bitcoin is now worth $1 million a coin, you could dispose of that Bitcoin as though its cost basis is $1 million.
See,
not as though your cost basis was 100.
As I pay my policy, I bought a Bitcoin at $100. Hypothetically, I'm paying my policy with this Bitcoin. I'm not going to tax on that on the front end, right?
That question is unknown, I should say. I'm not your tax advisor. And honestly, we have policyholders who have gotten different advice from different advisors.
Sure.
So is the paying premium a taxable event? Don't know. But what I can tell you is that any appreciation between now and a policy loan, you're able to have tax-free.
That's just a step up in basis is what you're saying eventually. What you said earlier.
Yes, exactly. Or what you're really doing is you sort of said it, is the policy is the collateral and you're borrowing new Bitcoin from us. And that usually that's only true if you follow specific rules in the Internal Revenue Code, section 7702. And we follow all those rules. And we have a tax opinion from a big law firm that these are insurance policies and policy loans are tax free.
Yeah.
So again, the mechanics are very similar to a traditional whole life policy.
Makes sense. And obviously, for anybody listening, we're not tax advisors. Do your own due diligence. Talk to your tax professional.
Yeah, I'm certainly not a tax advisor. We're a lawyer. Like I said, the bigger picture here, given what I think your listeners might be interested in, is these are personal products. We're spending time right now on institutional demand, right? So there are products that are like certificates of deposit, but with an insurance company. So that could be a way we could pass yield on to customers who aren't alive, right? So they're a company, or they're an institution, or they're a fund. We're building a bunch of infrastructure to do reinsurance for carriers that want to bring their own Bitcoin products to market, et cetera, et cetera. So I think we don't think about it a lot, but life insurance is 3 to 4% of global GDP. There's all sorts of different products. There's company-owned life insurance and bank-owned life insurance and deferred annuities and insurance bonds and whole life. And our ultimate vision is to do all of those things in Bitcoin.
Very cool. Very exciting. Yeah, definitely a different way of taking it, right? In the marketplace. Yeah, very exciting to see obviously being where you're at, first to market, and being along for the ride in real time.
I'm having a good time.
With talk to us about having a company denominated in Bitcoin. We're starting to see the DATs, the digital asset treasury companies. This is almost kind of like that to some degree. But talk to us about has there been a lot of complications for you guys when it comes to primarily taxes
as a company?
Yeah.
I guess first off, I would draw a distinction between us and the DATs in that we do own a lot of Bitcoin, but we don't just buy Bitcoin, we earn it.
Mm-hmm.
We are providing a productive financial service in the world, and then through that, we produce more Bitcoin. And I just think it's
Right. It's not leveraged in that
Yeah,
sense.
it's
Yeah.
yes, it's leveraged in the sense that all life insurance companies are like leveraged on capital, but it is not. I like to say, maybe to use those terms, like we have alpha, uh, which is just like running our business, whereas I think a lot of those plays are around like beta plays, and like structuring
Yeah.
plays. To answer your actual question, yes, we have a solely owned subsidiary that has audited financials in Bitcoin. And what we ultimately want to have is audited financials in our holding company. And our holding company is a US Delaware C Corp that has dollars. And yes, there are some funky interaction effects between GAAP and Bitcoin denominated audited financials, right? And that does somewhat create some weird edge cases with taxes. We, have a big four tax advisor, and we essentially do our best and then like make a reasonable effort to file and then pay our taxes. But ultimately, what we are going to want again is audited financials at the holdco, and that is a much higher standard actually than like filing your IRS return on like a best effort basis and like even having an advisor say this is good. So I would say we're on a multi-year journey there. We are on a multi-year journey. I'm hopeful that GAAP will be on a multi-year journey. But that is the actual ultimate vision is consolidated group financials. We are working on it.
Cool. Very cool. I was going to ask you what happens if the value of Bitcoin drops. I think we could skip past that because everything's in Bitcoin, so it doesn't matter the U.S. dollar
Correct.
price of Bitcoin. With the
Consolidated financials won't look as good, right? That year.
Right.
Yeah.
That's right.
But my Bitcoin financials may be unchanged.
Yeah. Talk to us about the roadmap for your company. What do you see for the future?
We've already talked about the big things, right? So there's really expanding internationally. We're doing a lot more third-party distribution, which is basically like agents, wealth advisors, and folks like that working with our product. The second thing I mentioned were these like certificates deposit. They're called guaranteed investment contracts. So we're working on that. And the third thing is reinsurance. So that's like our roadmap for the next 6 months to a year. There's a lot of stuff after that, particularly I think deferred annuities denominated in Bitcoin. But we just see right now, and we hope into next year, there's so much institutional appetite in Bitcoin. There's so much institutional demand that we are going to like run at those more B2B and B2B2C use cases. And then when the shit inevitably hits the fan, we'll go back to building our direct-to-consumer business model when it's only the diehards.
Yeah. No, I think it's pretty interesting. To your point, there's a lot of different ways you can go with this. Obviously, the insurance is an interesting one. It's more to my neck of the woods with Mr. Warren Buffett in my neighborhood here. He has a big holding in that.
He never really did life. He's really a P&C
That's right.
insurance guy.
But maybe the captive insurance, obviously other stuff he's done, which has been interesting. But yeah, even like the variable insurance products, the VITs out there, kind of like a mutual fund insurance wrapper. There's a lot of ways you could probably go with this. We see obviously the ETFs coming out, Bitcoin ETFs. Now you can really kind of bring a new product into the marketplace, which is pretty fascinating. Very exciting.
Yes.
Yeah.
Okay, cool. I'm gonna wrap up here then. Awesome. Well, Zach, this has been a lot of fun to have you on the podcast. Definitely, a lot of our listeners are in the crypto space, so I think this is something that could appeal to a lot of different people. I guess one final question before give a plug. Kind of, where are you guys available? Obviously U.S. citizens. You mentioned like Argentina. Is this global?
Not yet, because we have to build underwriting infrastructure for all these different countries. Our user base right now is primarily US, Canada, UK. You come to our website, which is meanwhile.bm. You can sign up there. And I think the important thing to mention on that is that that is not a like obligation to buy a policy. That is an obligation to have a phone call with me or someone on my team. So we really take the like solemn trust that people put in us by sending us Bitcoin quite seriously. And we know that people, as long as this podcast is like about how long somebody wants to talk to us to even really consider going through the process. So if you go to meanwhile.bm, you begin the process, and then someone from our side will reach out to you.
Cool. Awesome. Awesome, Zach. We'll make sure to include all that in the show notes. And thank you again so much for joining us.